Hello, friends. It's been a couple of days since my last update. So I wanted to give you another perspective of the market. My last update was on the 2nd of March, the day when this green candle here was printed. And just to remind you, at that point, I was saying that my bias was bearish, generally speaking, and I was waiting for a confirmation. And as you can see, the lines are still on the chart. For me, a full confirmation of the bearish bias would be when the price is going to close on a daily basis, a candle below this line over here. It says daily close below this confirms the bearish bias. And also I was saying that if I'm wrong, that should come in the form of a closure above this line here, which would probably open the gates of higher prices. Unfortunately, the market continues to be very difficult, very high resistance, except these few days with a higher volatility. It appears that we came back to a high resistance mode where the daily candles are overlapping one to each other, and we still don't have a confirmation um, neither to the upside or to the downside. So for now, unfortunately, we cannot say that we do have a confirmation. The market continues the sideways move as it did for the last, I don't know, 5 months since October. Okay, in a bigger range in the beginning, and from starting from the beginning of February in a more narrow range. It appears that for now, this daily fair value gap is just an axis for the price, and the price is moving up and down compared to this axis. My bias remains bearish. There is nothing changed for now, but I cannot fully confirm for the time being neither the upside or the downside for what the price is going to do next. So we are in a survival mode. We have to survive and preserve our capital during this very difficult trading period, because it's difficult. It's very difficult. And as I was saying in my previous videos, one way, in my opinion, to survive this period is to trade only the lower time frames. I generally do scalping mostly. I very rarely do day trading or even swing trades. And because we are in this point right now, I want to show you in the next minutes a trade that I took a couple of days, and I want to explain you a few things and maybe even ask for your feedback if you are willing to share such a feedback. So I will move from this chart, which is the continuous market, the NQ1, to the micro E mini, where I found the setup and I executed the trade. And then I will wait for your opinion on that trade. All right. So as you can see, I have moved to the micro E mini contracts, where I usually execute my trades. And I always trade the morning session, the AM session. I rarely or never use the afternoon. And as you can see here, this is 9:30, the opening bell. And I have previously marked the 15-minute swing point coming from the previous sessions, and the 15 minutes swing low over here, which we can see it was taken before the opening bell. So I had a sort of a bias in mind, meaning after we took the sell side here, I was expecting the price to go to the immediate buy side liquidity, which was kind of up here. And I was waiting for the price to give me a hint, to give me a setup. By this point over here, 9:33, the price has printed the first presented fair value gap. Whoever is trading ICT knows the importance of the first presented fair value gap, so I'm not going to insist on it here. And then the price kind of oscillated up and above, up and below the first presented fair value gap. And when I saw this candle over here, 947, this was for me the signature of a displacement. And by this moment, I considered this green candle over here as the breaker, and I was expecting the price to revisit this area over here for me to execute the entry. And basically I was thinking the following: I will entry here, I will place my stop loss somewhere around here below the breaker. I will target as a full target this 15 minutes swing point up above, but I will also wanna take a partial around this area over here. So let me say TP1. Okay. Now, I executed the entry, but I did not execute the whole trade because we were moving inside this new day opening gap coming from the previous days. And I didn't particularly like the indecision which was developing in this area over here. I mean, normally you shouldn't see this sort of indecision if the price is willing really to move in your direction. In this case, uh, in a long position. Okay, you want to see these sort of areas broken with conviction, as we have seen with these candles over here. All right. So when I saw this indecision over here, I exited the trade quite quickly. But unfortunately, eventually the trade went exactly in my direction, as the bias was correct from the beginning. It would have been a trade of 4.7 risk reward. And I will show you the execution also. Because I'm very transparent with you. So entry was here almost at this line. Look on the right side. Okay, it's 25,084, but my entry was 25,082, and I exited here at 25,121, which was a move of around 40 handles, somewhere around here. Okay, but what does it mean in terms of money? So these are micro e-mini contracts. As you can see, for micros, each handle is $2. Okay, so I took a position of five contracts times 36 handles times $2 per handle. This is $360. Okay, so this was the profit from this trade in 4 minutes. Huh? So started at 9:49, exited 9:53. I will write it down here, and I will do like this. Okay, so it wasn't a perfect execution. I agree. I would love to hear your take of what could have been done better. But at the end of the day, I closed the trade with a $360 profit in 4 minutes. For me, it's not a bad day at the office. Okay, so this is it for today, guys. Thank you very much for coming and for watching. If you like this kind of content, please like, subscribe, and share. And I will see you guys in the next one.